Hello मेरे प्यारे बच्चों. Welcome back. Exams are just around the corner. So let's make this chapter super simple. Tension nahi lene ka. We are going to master special purpose books together in just a few minutes.
Okay, so to get started, let's dive into a little story. I want you to meet Gupta ji. He runs a local Kirana store, and business is amazing. Customers are lining up, sales are going up. But poor Gupta ji, he's just drowning in paperwork. Why is that? Well, let's find out. You see, he's trying to record every single thing, cash sales, credit purchases, payments he's making to suppliers, everything in just one single book, the journal. Now imagine trying to put all of your phone's apps, your photos, your music, and all your contacts into just one folder. It would be a total mess, right? So slow, so confusing, and you'd probably make a lot of mistakes. Well, that's exactly what's happening with Guptaji's accounts. So here's the main point, the big problem. When a business starts to grow and it has lots and lots of similar repetitive transactions, just using a single journal becomes really inefficient. It's just too slow, it's too clumsy, and this is the exact problem that special purpose books are designed to solve. So what's the solution for our friend Guptaji? A team of superhero notebooks. Yes, you heard me right. We call them special purpose books, or another name is subsidiary books. Just think of them as specialized diaries, and each one has its own unique superpower. So the formal definition is that subsidiary books are special journals used for recording specific types of transactions, right? So you have one book for all the cash coming in and going out, another one for all the goods you buy on credit, and so on. It's kind of like having different people in a team to handle different jobs. This division of labor, it makes the whole process super quick, very efficient, and way more accurate. Now, let's meet the captain of this superhero team, the cash book. Okay, this is the most important special book. He is the hero for tracking all your cash and bank transactions. Practically every business, whether it's big or small, uses one of these to sort out their money. Exactly what Guptaji needs to do. And you know what the cash book's superpower is? It's that it's a two-in-one deal. It works as a book of original entry, just like a journal, but it also acts as the final cash account. What does that mean for you? It means if you prepare a cash book, you don't need to open a separate cash account in the ledger. It saves so much work.
All right, let's look at an example of a single column cash book. The rule is very simple, बच्चों. Paisa aaya, money came in, record it on the debit side. That's the left side. See here, cash received from sales, it's on the left. Paisa gaya, money went out, you record it on the credit side, the right side. Like the payments for furniture and salary. It's that simple, isn't it?
Okay, but businesses today don't just use cash, right? So many transactions happen through the bank. So how do we handle that? Well, it's time to level up our cash book. It's actually quite simple. The single column cash book, that's like the beginner level, right? It only tracks cash. But the double column cash book, that's the pro level. It has two amount columns on each side, one for cash and one for the bank. This is perfect for Guptaji because now he's taking a lot of payments directly into his bank account. Now, let's talk about something that often confuses students, the contra entry. But don't you worry, it's very easy. A contra entry is just a transaction that involves both your cash account and your bank account. Think about it like this. You're just moving money from your left pocket, which is your cash, to your right pocket, which is your bank account, or the other way around. The total money you have hasn't actually changed.
Let's break it down with an example. You withdraw 10,000 rupees from the bank for office use. Step 1, cash is coming into the office, so you debit the cash column with 10,000. Simple. Step 2, money is going out of your bank account, so you credit the bank column with 10,000. And step 3, this is the most important step for your exam. You have to write a C for contra in the LF column on both sides of the book.
Look here at this example cash book. On September 27th, cash was withdrawn from the bank. See that? It's recorded on both sides. And most importantly, notice the letter C in the LF column. This C is a signal. It tells the accountant, hey, don't post these entries to the ledger because the double entry is already complete right here, inside the cash book itself. Do not forget this C in your exam. Okay, but what about all those small everyday expenses? The loose change, the chiller? For that, we have another special little helper. Let's just call it the petty cash gulak, or piggy bank. I mean, think about it.
A big company can't be writing a check for 20 rupees for an auto fare or 15 rupees for a cup of chai, right? If they recorded every single tiny little expense in the main cash book, it would get so long and so messy. So instead, they use a separate petty cash book just for these small, repetitive payments.
Now, the petty cash book works on this really clever system called the Imprest system. And it's exactly like getting pocket money from your parents. The head cashier gives a fixed amount, let's say 2,000 rupees, to a junior cashier, who we call the petty cashier. The petty cashier then makes all the small payments from this money. At the end of the month, the head cashier checks all the expenses and just gives back the exact amount that was spent. So the petty cashier starts the next month with the full 2,000 rupees all over again. Simple.
And the format itself is really practical. You have one column on the left for the money you get from the head cashier, and then on the right, you have multiple columns for all the different types of expenses, like postage, conveyance, stationery, stuff like that. This makes it super easy to analyze exactly where all the small change is going every month.
Okay, so we've met the heroes of cash management, but our superhero team has other important members too. Let's just meet them really quickly so you have the complete picture in your head. First up, the purchases book. This is where Gupta ji would record all the goods he buys on credit to fill his shop. Then you have the sales book for when he sells groceries on credit to his regular customers. Now remember, these books are only for credit transactions of the main goods you deal in, not for buying something like furniture. Then we have the purchases return and sales return books, pretty obvious, for when goods are sent back. And finally, for any entry that just doesn't fit anywhere else, we have the journal proper.
All right, everyone, focus up. This is the most important part. Here are your exam super tips. Let's make sure you get full marks on this chapter. Okay, quick pop quiz. A customer's check that you deposited has bounced. Oh no. Where are you going to record this? Think about it for a second. The answer is you record it on the credit side in the bank column. But why? Because when a check bounces, the bank basically reverses the entry and takes the money back out of your account. So your bank balance has decreased.
Let's do a rapid-fire summary. 1. Your cash column can never, ever have a credit balance. It's impossible. You can't spend more physical cash than what you have in your hand. 2. The bank column, however, can have a credit balance. We call that a bank overdraft. 3. Contra entries. They're marked with a C and are not posted to the ledger. 4. The purchases and sales books are for credit transactions of goods only. And 5. The petty cash book works on the Imprest system. You remember these 5 points and you are golden.
And that's it. You've totally got this. This chapter is now completely sorted. Dekha? Kitna simple tha? It wasn't so difficult after all, was it? Just practice 1 or 2 problems from your textbook and I promise you, you will be a champion. But before you go, here's a final thought for you. In today's world of digital payments like GPay, Paytm and UPI, almost every transaction is a bank transaction, isn't it? So how do you think this is changing the way our local shopkeeper Gupta ji maintains his cash book? Think about it. It connects what you learn in class to the real world outside. All the very best for your exams, my dear students. You are going to do great.